Good morning, Paul Georgie from Allendale. It's April 21st. The USDA just released the weekly export sales numbers. Corn neutral, old crop 614,000 tons, new crop 244,000 tons, so right in line with what trade expectation was. Soybeans going to be a little bit friendly here to the nearbys, as the old crop sales were 349,000 tons. That's above the range. They were looking for anywhere from 50 to 200. New crop sales around the 200 mark. That's in line with what trade expectations were. Wheat was a bit disappointing, however. 135,000 new or old crop and 168,000 new crop, which the trade was expecting between that 200 and 400,000 ton range. So on the below the low end of the expectations there. But I don't know how important that's going to be as far as market mover here today. The factors of outside markets, I think, are going to dominate trade again. We got the dollar down sharply, down about 42 cents right now. Crude oil is up 25, gold up $5, and silver is up another dollar, almost $1.50 as we speak. Stock indexes are also higher. The futures market's expected to be trading higher here today. The overnight session was higher, basically on a rebound from yesterday. The fundamentals still remain the same. We've got still tight ending stocks. We still got China as a demand concern. They continue to tweak the situation there in order to control hoarding of corn, and it doesn't seem like they're getting the job done. And in the meantime, when they make these adjustments, all that does is throw fuel on the bull's fire here in the U.S. That's telling them that they're in trouble and they need to get more grain in hand, and that helps support our prices. So that situation still is building. We're starting to see some improvement in demand here in the U.S., basis improvement out in the western Midwest area yesterday. The negative situation yesterday that was talked about and used as a reason for the big sell-off yesterday in corn was ethanol usage. Was reported yesterday morning. That came in 5% less than the prior week, and showing that some traders looked at it as a reason that corn consumption will decrease, and that the higher prices are certainly curbing demand. And others are saying, well, it's just a maintenance situation at plants. That's why the weekly number is down. So really a 1 week adjustment is not the end of the line here. It will become more concerning if next week follows in the pattern of lower usage numbers. The International Grain Council announced yesterday that they believe that the drawdown in supplies of grain around the world is going to continue to get extremely tight and be at a 4-year low, which is an 18% stocks to usage ratio compared to a 23% just in the last time they did the analysis. So that overall world supply and demand is still a concern for grain prices. Weather, I think, is going to be the dominating factor here, but how many times can you tell that story over and over? We know it's raining. We know we're going to have delayed planting in corn now. It's a matter of how late is it going to be. We were targeting that first week of May as having 50% of the corn crop planted around the U.S. Doesn't look like it's going to happen, but in the past we have had successful and bumper crops when the corn has been planted later in the season. So we don't give up hope completely, but traders use that as fuel for this fire. But the real concern is how many days over and over can you use that as food for the bull. We are hearing some prevent planting already in spring wheat, where farmers are turning back their wheat seed and replacing it with soybean seed. So that's going to continue here as the wet conditions, flooding conditions up in the northern plains continue to affect that planning. In the soybean sector, not a lot of news. Harvest continues in South America, and we do have option expiration for the May contracts today, so that could adjust things a bit. After the volatility we've seen yesterday, we would expect some two-sided trade here today with a more quiet type session ahead of the long weekend. In the livestock trade, cash cattle traded steady yesterday, which was certainly a surprise after the big drop in futures yesterday. We traded at 119 in Kansas. Cutout values were down just slightly on choice, down 6 cents yesterday afternoon. The focus there and the concern is that with the high energy prices and high gasoline prices, that's taken away from this spendable income that can be used for beef, and that is driving some negative attitude in the meat market currently. However, we've got a stronger stock market here this morning that could and should support futures here as we get out of the chute here in the open outcry session. In the pork complex, a lot of the same story with beef concerning the demand at the retail counter with the high gasoline prices that we're seeing. However, tight supplies of pork, export and world demand for pork is good. We expect to see pork prices work higher. We still got this target in the June contract up around this 106 area, and we think that we can work into that area as we go into next week and we get into the 1st of May. We do have a holiday tomorrow, and markets will be closed. We'll start again on Monday or Sunday night, and we wish everybody a happy Easter and a safe weekend and a successful trading day. So we'll talk to you on Monday morning. Thank you.